if you're an individual, if you're a business or if you're an individual, you now need to become much more macroeconomically sensitive to the strength of the currency. If the currency was not expanding ever, then it doesn't matter. And if it's expanding at a slow rate, you can afford to ignore it. But when the currency starts expanding or the inflating at a more rapid rate, what happens is the prices all around you start to move, and then you have to interpret them properly. For example, you could say to yourself, well, there's no inflation, because I read in the paper there's no inflation. But the papers say inflation is CPI, but CPI is just an arbitrary metric. It's measuring the rate at which a market basket of items which I selected for you go up in price. And so I can select any basket of items, and there are no assets involved in that selection. So, for example, over the past 12 months, CPI looks like 1%, but the rate of but housing, if you wanted to buy the house, went up by 11%. But if you wanted to buy a house in Palm Beach, it went up by 29%. But if you wanted to buy shares of stock, they went up by 24%, and the NASDAQ went up by 50%, and Bitcoin went up by 400%. Okay, so is there inflation or not? Well, it depends on what you're tracking. So I think March was a big year. What happened in general was the money supply everywhere in the world started expanding at double to triple the normal rate. And that causes the currency to weaken in purchasing power against scarce assets. That is, assets that everybody wants to buy. So the reason that the stock market went up is not because you're a genius and you pick good stocks. It's because the same number of stocks exist today as a year ago, but there are 25% more dollars. So a very simple way to think of it is, if I have 10 buildings on my, or 10 houses on my city block, and if I double the amount of currency and everybody has to live in one of the 10 houses, the price of the house is probably going to double. And so what's happening here is that the currency is weakening, and it's manifesting itself differently in different assets and products and services. And if you think about this, if I increase the money supply by a factor of 10, the cost of watching streaming YouTube videos is not going up, right? Because it's very low variable cost. But if I increase the money supply by a factor of 10 and there are only 10 houses in your neighborhood, the cost of the house is probably going up. So what you have is immediate inflation in assets, because instantly, people get their stimulus check, they go buy stocks, or they go buy Bitcoin, or they get some money, they buy that house they wanted. You have very slow inflation in consumer goods. How do I go travel on vacation if it's not possible to travel on vacation? How do I go on a cruise if it's not possible to go on a cruise? So you didn't get the inflation in certain parts of the consumer economy. You got immediate inflation in assets. And so here's the big conclusion. In an environment where the money supply is expanding, if you don't have a large asset portfolio, then you can't you can't maintain purchasing power to buy the things you want in the future if those things are assets. And of course, they probably are. You probably want a nice house. You probably want cool things that are scarce. So this is why after the lockdown, it became very important to understand finance. You have to become much more financially sophisticated, because the playing field is tilted in favor of the asset owners against people that work for cash and a salary or generate cash flows. The value of your cash flows is falling at that 24% rate, and the value of your assets is accreting at that 24% rate. And the playing field is tilting in favor of people, in favor of Wall Street against Main Street, if you will. The good news is, in February, you had a mild monetary inflation problem, 6-7% a year. It's still pernicious. It's really draining the assets of workers and cash flow and Main Street. It's hurting, but it wasn't big enough. The heat wasn't strong enough for people to really leap out of the boiling water. We started boiling the water in March. And so we went from I think one company said they had 20 institutional customers at the beginning of the year, and they went to 290 by the end of the year. You know, the total amount of public companies with Bitcoin on their balance sheet was $2 million in February. Then we did it, and then we bought 250 million and 500 million and then $1 billion and then 2 billion, and then Square did it and Tesla did it and all these other companies did it, and it became an issue. And then all the big investors started to notice there's a problem with conventional bonds and cash instruments. So Ray Dalio says cash is trash.
The question is, what do you jump into when
Right.
you jump off the train? And the issue is you can't jump into cash. Cash is trash.
And he's the largest hedge fund owner in the world. So all of the macroeconomic speakers, Blackstone, Skybridge, Paul Tudor Jones, Stanley Druckenmiller, Bill Miller, they all started to speak about this subject after March. So we're now 1 year in, and by the way, this manifests itself as Bitcoin goes from 4,000 to 50,000. We're 1 year in, there's an avalanche of institutional interest. 1,000 institutions get in. They all have a voice. They all talk to each other. Just 2 days ago, Howard Marks said, you know, I was wrong about Bitcoin. Now I understand why the world needs scarce assets in a monetary inflation environment. And he's well thought of. And now hundreds of other people running institutions with large pools of money start to notice. So I think what happens is, you know, first of all, Bitcoin is the solution to the problem because it is the apex property. You can't inflate it away. It's a global monetary network for people that want to store their economic energy for the next 100 years. So it's the solution to the problem. That's why it's exploding in value and in popularity. As the early adopters move, then more adopters move, then institutions move, then all these billion-dollar entities move. The mainstream media started to cover the story differently after February 8th. February 8th was like a big date when Tesla announced they bought $1.5 billion of Bitcoin. Now this started hitting in the New York Times, the Wall Street Journal. It started showing up in Fortune and Forbes and everywhere in the world. And people said, well, maybe there's something here. We got to pay attention to this. Now, you know, generally politicians and conservative large bureaucracies will be the last to embrace this, but it ripples, right? From the visionary entrepreneurs to the early adopters to the macroeconomic investors to other investors to, you know, first the techno media, then the mainstream media, then sparks fly, a little bit of smoke, a little bit of controversy. Now you got to have an opinion. And it's going to be injected into consciousness. I think this is part of the healing process of a free market